Thank you everyone for joining us today. We will start the webinar momentarily. We're just going to give folks a few moments here to file in. Hello, this is Ashley McHugh from Insurance Newsnet, and I will be the administrator for today's webinar, How Will COVID-19, the Midterm Elections, and Healthcare Expansion Affect Agents and Brokers? Moderating the webinar is Susan Roop, Managing Editor at Insurance Newsnet. Susan has been with INN since 2012, following 13 years with NAFA Pennsylvania, as well as a number of years as a newspaper reporter and editor. She will be speaking with two people who have had a great deal of experience representing the health insurance agent. Marcy Buckner, Senior Vice President of Government Affairs at the National Association of Health Underwriters, and Ronnell Nolan, President and CEO of Health Agents for America. Please ask any questions that you may have in the questions pane during our discussion, and we will get to as many as we can at the end. And with that, I'll turn it over to Susan.
Hello, everyone, and thank you for joining us today. The health insurance agent has faced a lot of challenges over the years. Whether it's dealing with regulation, getting commissions paid, or working with carriers, agents have been fighting for survival. What will the future bring? Our two guests today will give some insights into that. Marcy Buckner is Senior Vice President of Government Affairs at the National Association of Health Underwriters. Marcy monitors Congress, federal agencies, state legislatures, and state departments of insurance concerning issues affecting the health insurance industry and agents and brokers, with a focus on the state implementation of healthcare reform. She also drafts state and federal legislative testimony and prepares comments on regulations affecting the health insurance market. Ronnell Nolan is President and CEO of Health Agents for America. HAFA is a nonprofit trade association for health agents created in 2012 to educate and protect the independent health insurance agent and the clients they represent. HAFA represents independent agents in all 50 states. Ronnell has 20 years of government affairs experience representing clients in Washington and in the Louisiana state capital of Baton Rouge. Today, we will discuss the challenges faced by the health insurance agent, what is happening on the federal level that impacts their practice, and what they need to know to survive in the future. And with that, I'd like to welcome Marcy and Ronnell. Hello, Marcy.
Hey, thank you for having me.
And hello, Ronnell.
Happy to be here. Thank you so much.
Okay, but before we go any further, I would like to take a brief audience poll. And here's the question. What is the main focus of your practice? We'll give you a minute to answer that. And while we're doing that, we're going to get started, and I'm going to ask each of you, what would you say is the single biggest challenge facing the health insurance agent today? And Marcy, let's start with you.
Say the biggest challenge facing health insurance agents and brokers is really the threat to employer-sponsored coverage and the complexities that keep being built upon for ESI. And we all know, as more and more regulations are put in place on employer-sponsored coverage, it makes it harder for employers to stay in the market, but it also becomes harder for you all to be able to assist your clients and be able to help them with all of these different complexities. We've made it through employer reporting, kind of, where I know there's still some struggles there, but there are a lot of other pieces that are looking to really kind of tackle and hurt employer-sponsored coverage. One of those pieces is a threat to the employer exclusion. The employer exclusion is that provision that allows employees to deduct from their income the funds that employers provide to them in the form of health insurance benefits. And there are some thoughts on the Hill that either capping or completely repealing the employer exclusion would be a great way to raise taxes and put some money in the federal treasury. But we feel that this would be one of the largest tax increases that we've seen on middle-class Americans in quite some time, and would also threaten the benefits that employers have from the employer exclusion and possibly put them in a situation where they're no longer able to offer employer-sponsored coverage. coverage. And without employers in the health insurance market, that's a huge threat to health insurance overall in this country. So we're very concerned about that, as well as some other provisions in Build Back Better that are harmful to employers, but I think we'll touch on those pieces in a little bit.
Okay, thank you. Ronnell, let's turn to you. What is the main issue facing your members?
With the passing of the ACA, our commissions were cut automatically that day 50%. So it is the main reason that HAFA started, was to fight for the independent agent and the fact that we needed to be paid a fair wage. So the word commission is something that's important, and it's always at the top of our list because there's no profession in the world that works for free. Many instances, insurance companies have found ways to not pay the independent agent. So it's something that we fight daily. Without commissions, without being paid, we will not have an industry. We will not have agents and brokers in the market. So something very, very important. And there's absolutely some opportunities with the family glitch that they're talking about. And we'll talk about that a little bit later, what that does for the group agent and how that opens a door for them to get involved in the individual market. So I would say the biggest thing is we want to be paid. We want to be paid a fair wage.
All right, thank you. Marcy, one of NAHU's biggest issues has been monitoring the federal and state governments to educate your members on any possible expansion of government healthcare, such as Medicare for all, public option, et cetera. So what can we expect to see on the federal level? And big question is Medicare for all dead?
It's never dead. It's always looming. We have had some recent successes. Build Back Better, I know people have been hearing about that bill for quite some time. They thought they were going to get it passed by the end of last year, and that didn't happen. But what did happen by the end of last year was that there was a Medicare buy-in, or would have really created a public option, which was lowering the age of Medicare eligibility to 60. And we were able to get that taken out of Build Back Better. Anytime we see opening up any type of public plan to a new population, a new community, we always worry and are concerned about the opportunity for that to open up to larger populations, larger communities, and create a true public option. So, and there are also other concerns with lowering the eligibility age to age 60 and the impact that that would have on current Medicare beneficiaries. But so that's one example of getting, of killing a public option proposal that was in Build Back Better, but there are always more proposals coming forward and in different ways. So something that we try to do both with our members and with members of Congress is to make sure that we're educating them on the difference between universal coverage, Medicare for all, single payer, Medicaid buy-in, Medicare buy-in, because those are all different things that are very nuanced. And oftentimes those terms are used interchangeably. And that can be really dangerous on the Hill and also out in the public when you're talking to clients.
Mm-hmm. Okay, and here's my follow-up question to Marcy. We're seeing more efforts toward expanding government healthcare coming on the state level. So can you give us a rundown on what is happening in the various states and what is NAHU doing about it?
Sure. So we're a member of the Partnership for America's Healthcare Future, which is active both on the federal level, so tackling those Bernie Sanders bills and joining us in comments and testimony that we've been submitting there. But also, they're also active on the state level. And so we've seen them participate in conversations with states like Washington that recently did put in a public option. It is what I would kind of call a public option light. It isn't a pure public option yet. It is to be phased in, and they're still in the phase-in process and really reviewing some data from the first year or two to see if it's even worthwhile. Then we're also watching Colorado, which has passed a public option, but is trying to figure out how to implement it and how to fund it, which has been a huge barrier for them. Also, good old California, you can always count on them to throw a wrench into things. They recently, earlier this year, had a bill that was really set up to pass that would have created a single payer market in California. And then because of some politics really at play, it ended up being voted down. And that was a huge success, and somewhere where we sent thousands of messages to the legislators in California to combat that. And then New York, they're another one that has had a single payer bill introduced in their assembly every year for almost 20 years now, or over 20 years. And New York and California are very similar, where the proposals that they have would actually cost more than their state budgets. Well, New York's state budget, almost more than half of California's current state budget. And so there's no funding mechanisms in these bills that they're looking at, and it's going to come down to the taxpayer dollars. So we're working with the Partnership for America's Healthcare Future and our state associations to once again educate both our members and the members of the legislatures in those states about how disruptive this could be to the market, but also how costly it could be to taxpayers, and possibly leading to some unintended consequences of an increase in uninsured or an increase in premiums and prices in one way or the other, whether it's directly to their pocketbook through taxes or through other costs. Really, because some of the public coverage that they're offering really wouldn't cover what folks are used to in their market and their employer-sponsored coverage and individual plans.
Mm-hmm. Okay, Ronnell, one of HAFA's biggest issues has been fighting for health insurance agents to be compensated properly and receive their commissions. Health insurance agents received sort of a victory from the Centers for Medicare and Medicaid Services recently, when they said that failing to pay agent commission during special enrollment periods violates the Affordable Care Act. So can you please describe what's been happening here, and will we hear any more about this issue?
Absolutely. And we'll talk about the first thing being the recent Q&A sent out by CMS. That was a huge victory. As I said before, that's something that's on the forefront of our thoughts all the time is commissions, and something that we've worked very closely with CMS about the fact that, there were insurance companies that were not paying during an SEP. And our big question was, it doesn't matter if we're writing coverage during open enrollment or if we're writing coverage during a special enrollment period, we're still helping that individual. And it's unfair for insurance companies to stop paying. What we found was a CMS letter that was written in 2016 that basically said that it affected marketing, that they could not do that. Once we started bringing that out, there was some media coverage, exposure, some Capitol Hill involvement. We recently, last week, got a phone call from CMS saying, look, we're making this change. And for years, I've asked them for a change for years. And they've always said, Ronnell, you need to go to Capitol Hill and this needs to be federally legislated, which I did. But most folks on Capitol Hill do not want to hear about agent commissions. They have bigger, fish to fry. So this was awesome. I knew CMS could do it, and they did it. Now, our biggest issue now is, are they going to go back and pay commissions that should have been paid during the SEP? And I have agents and brokers that are owed hundreds of thousands of dollars individually. It's a lot of money. So I have reached out to CMS and said, what is your position? If they shouldn't have done it, I'm not an attorney, but if they shouldn't have done it, then they owe the money. There was one insurance company that came out and said, we're going to pay back for the SEP. But I have not heard from all insurance companies yet on how that's going to be handled. The other kind of feather in our cap that we love to talk about is this year, there was a web broker that sent out an email saying that all the client information that our agents put in their for was not their information anymore. It wasn't your client. You couldn't download information. So we went to Capitol Hill. Capitol Hill senators and representatives reached out to the CMS administrator, and that was changed. Now agents and brokers can download all of their information that is their clients and should be their clients And that was a big feather in our cap. So we're excited about that. And just to piggyback on a couple of things that Marcy said, we are watching New York also. And the reason we're watching New York is that they're not paying commissions. They haven't been paying commissions. They're not a federal exchange, they're a state exchange, so that they make things a little more complicated to try to get our agents paid. But that's something that I'm thinking about. In California, just a funny, we have a board member that always talks about, you must watch California because whatever happens in California is going to happen in the rest of the nation. And recently in Louisiana, the legislators started calling our bills sexy and squishy. So I've been telling everybody in California, yeah, you might start some things, but I don't think your bills are squishy or sexy.
Oh, that's great. Now that we're on the topic of commissions, another issue facing the health insurance agent is the issue of commission transparency. I know that both of your associations have been educating your members on that, and I'd like you to tell us more. And Marcy, let's start with you.
Sure, and I'll pop back onto the SEP issue really quick, and then I'll go to broker transparency. But something that we were also concerned about with the difference between payments of commission between the SEP and the OEP. We, of course, want agents and brokers to be paid so you can keep your doors open. But something that we voiced our concern about with CCIO and CMS was also the impact this has on the market. When you're not paying agents and brokers in the SEP, it's not allowing them really to help those customers. They can't work for free, like Ronnell said. So when those agents and brokers aren't available to consumers because they really just can't afford to help someone for free, that consumer during an SEP, which is probably when they need that help the most, isn't able to access an agent or broker. And then they might end up in the wrong plan for them, or not even in a marketplace plan when they should be in a marketplace plan. And that's what they're looking for. It could also have the unintended consequences of steering to one carrier over another, or some carriers could use it as the opportunity to limit who is coming in through their SEP, since oftentimes higher risk individuals come in through their SEPs. So by not paying commissions, they're trying to skirt those over to a different carrier. So those are some other thoughts that we had about this issue and voiced in 2016 as a response to the letter that Ronnell mentioned. So we are thrilled that CMS came out with that FAQ last week, and that these payments are going to be enforced for SEPs, but also that hopefully it'll lead to an increase in stability in the market for those other reasons. Mm-hmm. But then going to broker transparency, so we have been working on this for quite some time, since Senator Alexander's office came to us saying that they wanted to work on this. And originally in the bill, they were going to require agents and brokers to disclose exactly how much they anticipated making for the coming year. And we spoke to them about how agents and brokers are actually paid, and that there can be a lot of different factors that come in to play based on a book of business that then provides the amount of what an agent or broker can anticipate making. And so there needed to be more flexibilities in the law to provide for things like, and this is on group plans, to provide for things like calculations or a formula or a commission schedule to be able to comply with the broker transparency requirements, because there's really no way an agent is going to be able to come up with an exact amount that's going to be anywhere near accurate. So we were able to get that piece into the bill. And then we were also able to work with the Department of Labor on their FAQs that they came out with, again, talking about the group market, to say that the enforcement would be good faith, so that agents and brokers, if they were using a good faith estimate on what they reasonably anticipated to earn in the coming year, they would be in compliance. Just really putting a little bit more color into what was in the No Surprises Act and the CAA for agents and brokers, and providing, I think, a little bit more reassurance that as long as they were doing their best to provide these calculations, these estimates, these formulas, that they would be in compliance. And to help folks be able to meet those requirements, NEHU has an entire library of resources on the broker transparency rules. And we have pamphlets, little handbooks that can walk you through for group and individual market to help make sure that you are providing the accurate information. We also have several webinars and podcasts that also talk you through things. So if you just need a little bit more reassurance to make sure you're filling out and providing the accurate information to your clients, it's a great place to go, nahu.org, and you'll see our broker transparency library there.
Okay, thanks, Marcy. So let's turn to Ronnell. What can you tell us about educating your members on commission transparency?
Absolutely. We approached it a little bit different with Senator Alexander's office in that we tried to get them to direct this law towards insurance companies, as they are the ones that know how much is paid. Now, obviously that didn't work because it's still directed on the group side to agents and brokers. So on the individual side, CMS regulates the individual disclosure. The law does say that insurance companies must disclose. However, in the proposed rules, it says insurance companies may ask us to do it. Final rules have not been released. We're not sure when they're going to be released, and we ask all the time about that. Every insurance company I know of is disclosing commissions, except for United Healthcare. United Healthcare sent a mass email saying this is the agent and broker responsibility. I've talked to the NAIC and they're like, the law is clear. It's directed to insurance companies. So that aside, on the group side, this is regulated by the Department of Labor. I met with them, and without a whole lot of regulations or release of anything, what they basically said is this was passed on the financial side for 401ks, and you guys kind of need to just go along and learn from what we've done in the past. What we did, because it was so complex, is to hire a DC attorney to take the law, take pieces apart, and then create a form that adhered to the law and that was going to be compliant. So there's a form that we have that for our members, it's $75, unlimited use, but it is amazing and has all the pieces and parts that you need for your group client. Not only that, a copy is kept by the DC attorney. So if you sent it to your client, they didn't receive it, or you had any questions or whatever that happened, you do have that backup. One thing that I'd like to point out that some people have said you do not need it to be signed. We have said from day one that absolutely have them sign it, date it. You keep a copy, they keep a copy, because this is very important. Right now, there's penalties. There's penalties built in if you do not disclose commissions. The Department of Labor is not being real hard on us right now, but eventually they will. Eventually they'll figure out who's doing right and who's doing wrong. And what I always tell my agents, you might be doing the right thing, and you're disclosing, but if you make a mistake and you don't, Agent B, and I always call Agent B the bad agent. Agent B is going to come behind you and they're going to say, did Ronnell tell you this, 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 and this? Did they disclose it in a timely manner? Did they give you the reasonable amount? Was everything, projected on what you think your bonus is going to make, and that you included everything? And if you didn't, then that's where the trouble is going to lie. So make sure, do the best you can. And Marcy's right, the part that says, do the best you can, be as honest as you can. If you make a mistake, you have so many days to make that correction. So there are some pieces and parts, but it's very important. It went into effect 12/27. There are so many people that said that law, that is not law. It is in effect. If you had a group that you already renewed prior to 12/27, you don't have to do it until next time. But if you're renewing groups for 2-1, 3-1 going forward, those are the groups you need to be transparent, and you need to provide some type of form, whether it's HAFA's form, somebody else's form. You got, your attorney to create you a form, doesn't matter. Just make sure you comply to this law, because it's important and it's directed to agents and brokers.
And I agree on getting that signed copy and making sure that agents and brokers keep a record of that. The penalties are ERISA penalties, and the audit would be a DOL audit. And so if you've ever experienced either of those things, you know that you don't want to experience those things ever again. And this is one thing that's really simple that, and right now, the reporting, kind of whistleblower on this is the employer to say, to DOL, I don't think I got this. And then the DOL would investigate. But there are concerns that in the future, this might get listed on some of the DOL audits so that if they're auditing for something else, they might just check for this too. So it's just a good idea. If you're doing it, just have it signed or have an electronic acceptance, just something that you can have a record of so that it doesn't lead to difficulties down the road, because you want to get credit for being in compliance. So that's the way to do it.
Mm-hmm. Sounds good. Since we're just finishing discussing commissions, I think this would be another good place to do a poll. And our question is, have you been impacted by decreased or eliminated commissions in the past year? And while we are discussing that, or while we're getting some answers on that, we're going to move on and talk about some of the other regulatory issues that health insurance agents are dealing with. So we're going to start with you, Marcy. Can you tell us more about the regulations and what agents need to know?
Sure. Well, last week we submitted comments on the proposed rule on the family glitch, which would reinterpret the definition of affordability for those spouses and dependents that may be offered employer-sponsored coverage, and making sure that the definition of affordability now under the proposed rule would not hinge on the employee's offer of coverage. Instead, it would look at what the employer is offering towards the spouse and dependent. So for example, one of my good friends and I have been using the Brady Bunch as an example because that's an easy one. We know those characters, right? So Mike and Carol are married. If Mike has an affordable offer of coverage from that architecture firm he works for, if the architecture firm is offering coverage for spouses and dependents, but they're not putting any contribution towards that coverage right now, if Mike has that affordable offer of coverage as the employee, Carol and the kids, they can't go to the exchange and get any type of subsidy based on the family income because Mike as the employee has an affordable offer of coverage. Under the proposed rule, that would change. Carol and the kids could go to the exchange. And if the employer does not offer affordable coverage for them, if it's more than 9.5% of that family income for them to go on the employer plan, then they would qualify for or possibly qualify for a subsidy based on their family income and be able to go into the exchange and do that. So we see a lot of different implications on this, both on the employer side and on the individual side, which we voiced. On the employer side, the proposed rule does say, and using that same example, that Mike, if he has his employer-sponsored coverage that is affordable, he cannot get a subsidy in the exchange if he decides to go with Carol and the kids over to the exchange. They would qualify for a subsidy, but Mike would not if he has that affordable offer of coverage from his employer. He can waive that employer-sponsored coverage, but there might be some scenarios where he won't want to. So that does keep the employees in the employer-sponsored coverage, or the theory is that it keeps that employer-sponsored coverage firewall intact. But we are worried that there could be, and it's hard to determine, it's hard to estimate how many spouses and dependents could leave employer-sponsored coverage and leave those groups, and whether that's going to lead to a participation problem, whether employers are going to even think that it's worth offering coverage based on who they still have in their groups. It's also, because of the timing, really difficult for some employers and the individuals to even make a decision on this. This is set to go into place January 1 of 2023. Obviously, it's June, and carriers have had their plans, have submitted plans for approval, and they've done so not knowing whether this a number of things, not knowing whether the family glitch proposed rule is going to be finalized, not knowing whether those increased subsidies from American Rescue Plan Act will continue, and the unwinding, which we'll talk about in a few minutes with Medicaid. So they've submitted plans not knowing those three things. And we know that when there's actuarial uncertainty, we see premiums rise. So it's we're very worried about that with this proposed rule going in place so soon. We're also worried about the individual market and being able to even accurately reflect whether someone does qualify for a subsidy in the exchange. And that's where we're really pressing on Congress. We have had an employer reporting bill introduced several Congresses now that would allow for a prospective reporting system. So employers are reporting at the beginning of the year what they're offering instead of at the end of the year. And under that system, and with this proposed rule of the family glitch, if employers were reporting in that manner, then when Carol and the kids go to get on the exchange, if they logged in, if the IRS and DOL already know and can tell HHS that Carol and the kids, Mike's employer is offering them affordable coverage, so you can't get subsidized coverage, and it'll pop up and prevent them from going in and enrolling. Because we know how difficult it is to explain to folks that are coming in, if you get a subsidy and it turns out you shouldn't have qualified for it, you are going to have to pay it back in your taxes. And that's very confusing and very concerning. So those are some of the things that we're watching with the family glitch rules. And like I said, the comments were due last week, so we're still waiting on final rules. And I think probably additional sub-regulatory guidance, if not regulatory guidance, on how exactly this is going to come together, because even the preamble of the family glitch proposed rule says that they don't have the data from employers to be able to even accurately estimate how many people could possibly make this change. So we also know that based on that, they are going to need some additional data from employers. And so employer reporting is going to change. And to do that, they're going to need more rules. So those are some kind of larger flag issues on the regulatory side.
Okay, that's a lot. Ronnell, do you have something you can add about regulations and what agents need to know?
Yeah, absolutely. First thing I'd like to say is that you need to be a member of an association. To wrap your brain around everything that is happening is impossible. You need someone to help you be that gatekeeper, because a lot of things aren't happening like they used to, where you passed a bill and you watched it for, a long period of time and you were able to, give some input. Now it's more proposed rules, but final rules, and a lot of things are happening. And Marcy's right. The family glitch is going to be a big issue. What I've been telling folks is, use this as a door opener. Make sure that you can sell both. When you talk to your employer group, and some folks are coming off of the dependent side, make sure that you help them get into a marketplace and that you're not losing that business. And I've read a lot of information from the Kaiser Foundation that said it's not going to have a big effect on the employer market. And I know HAFA is asking for some additional rules and regs on how this is supposed to work, because it is going to be complex. I was on the Hill when ACA was passed, and we were already talking about this, that it was going to affect the dependents. How were they going to get affordable insurance? They were not all on the call that sell insurance know how expensive, and the cost continues to increase. So those folks that are in that, income bracket that should get a marketplace subsidy are not being able to get help, and they're going without coverage because they can't afford either paying 100% from the from the premium, or in some cases maybe 50, but most people are making you pay 100. And the other thing that we're watching is the new Medicare rules that are coming out. Agents and brokers are very concerned on what does that mean. We believe it was done to try to get rid of the bad eggs that were calling people and confusing seniors, but it has got tentacles, and the tentacles do reach the agent and broker community. So that's something that we're definitely working on. And then, of course, and I'm sure we'll talk about later, is the Medicaid, rollout, and the fact that CMS has told the navigators that you're going to be our lead in helping all these folks. And I have to say, no, agents and brokers are going to be the lead in, and we're going to do that happens, whether it's through local media or whatever. But agents and brokers on this call need to be prepared, and you help folks. We do not need any competition, and we do not need navigators doing your job.
Mm-hmm. Okay. Looking into the future, there's a lot going on in Washington, a lot on the horizon, midterm elections and all of that. So I would like to know, what do you see on the horizon in Washington that will impact the agent's ability to do business? And Ronnell, let's start with you.
Absolutely. I think that we survive regardless. Whatever box we're put in, we're going to survive in that box. And, under the Trump administration, there were some things that were done, like defunding navigators and things like that were helpful. But you stood, strong, and you kept your eye on the prize. And then under the Biden administration, we're getting your SEP money back. So it doesn't matter what happens. I think it's interesting. We should all know, because knowledge is power and you need to pay attention. But whether it's a Republican or it's a Democrat or it's an independent, we can work with them. We represent them. We have their constituents are our clients, and we just need to make sure that we talk their language when we go on Capitol Hill or in state government, and that we get their buy-in and we get their help. So I think there's going to be some shakeup, but the shakeup I don't think is going to affect us.
All right. And Marcy, what insights can you give us?
Yeah, and I think mentioning the different political parties and working with everyone is important. That's definitely what we see on the horizon when we look at the numbers, both the current numbers in the House and Senate, and also the projected numbers in the House and Senate for the midterm elections. Yes, we could have some shifts in leadership, but especially on the Senate side, it is not likely that either party is going to have 60 votes in the Senate to be able to pass things without reaching across the aisle. So what we're going to see is a lot of compromise. And a lot of education on our part, especially with those moderates, to be able to get them to hold firm in the center and be able to pass some common sense solutions here. And I also think that on the horizon is really a great opportunity for agents and brokers to show their value in the market. When we're talking about all of these changes, most consumers find out about them from you guys, from working with their agent and broker. They're not getting updates from any other professional that they're working with. And especially with the family glitch, there's no one else that is suited to be able to sit down with someone and look at their offer of coverage from an employer and look at the individual market plan and look to see what makes sense to them financially. Does it make financial sense to go on the employer plan, even if the spouse and dependents aren't getting, a quote unquote affordable offer of coverage? Or does it make sense to go onto the exchange and get a subsidy? Looking at it financially, but then also looking at it from the network possibilities. Agents can sit down and say, well, on the employer plan, this is going to be your network versus going on to the individual market. And what's best for you? Do you want to split your family up, split a deductible, split a copay? Or is it more important to you, might be a little bit more expensive for everyone to be on the same network, but is it easier for you, Carol, to take all 6 kids to the dentist at the same time and know that they're all in the same network and have Mike come along? It probably, that's what we did, and I didn't have 5 brothers and sisters, but my sister and I competed over who walked out without any cavities. So that was really important. And we understand that that's important to folks, and agents and brokers are the ones that are going to be able to sit down and help families and individuals make those decisions. So I think that agents are really poised on the horizon to really show their value with this Congress and the next.
All right. Let's turn our attention to COVID-19, which seems to be all we've talked about for the last going on 2 years now. And the public health emergency that was declared over COVID-19 is due to come to an end before long. How will that impact health insurance and your members? Marcy, can you give us some insights on that?
Sure. So with the end of the public emergency, number one, and I think most importantly, and Ronnell alluded to this, the end of the public emergency will also trigger what CMS is calling the unwinding, which is folks that went onto Medicaid during the pandemic were not able to go off of Medicaid during the pandemic. So this is going to create a huge opportunity for people who are on Medicaid and may no longer be qualified to be on Medicaid because of those special rules during the public emergency. And because they've just experienced health insurance, what we see is once people have health insurance, they like it, they want to keep it, they want to enroll. So those folks are going to be positioned to go into the individual market, most likely, and most likely will also be eligible for a subsidy in the exchange. So what we're doing is educating our members on the unwinding process, making sure that they understand not just that, number one, this is happening, and we're also sending that message to the Hill, making sure that members of Congress understand that this is happening and that they could be hearing from their constituents later this year about concerns over this, but also what exactly is the best way to discuss these options with this population, with this very specific population going from Medicaid onto, again, most potential is for them to go onto an individual plan. And we, through our education foundation, have a short little video that we have that explains the unwinding process, make sure that people know about some of the different time periods, because if you miss a time period for changing your insurance, you could possibly go without coverage for a month or more. And we want to make sure we don't have any gaps in coverage between Medicaid and going onto an individual plan. So we'll really be doubling down on the education for this. And I think this is the largest piece now that we're in this phase of the pandemic that we see. We've kind of overcome all of those emergency rules that came out that impacted employers. And now we're really seeing a shift to how the pandemic is going to impact these individuals.
Okay, thanks. And Ronnell, what can you add to that?
Absolutely. With the moratorium that the federal government put on Medicaid, there are folks that make way more than they should make to be on Medicaid. So there's going to be a big, huge discussion. What makes it complicated is that when the feds flip that switch and they make that decision to end that, each state is going to make the decision on when to implement it. So you as agents and brokers need to watch very carefully, pay attention, know when it's happening in your state, because that individual is going to get a letter and they're going to say your Medicaid ends at this date. You need to be prepared to help that person. And that's what I said earlier, reaching out to your local media, getting on those TV shows, doing radio, letting folks know that this is going to happen. And when it happens, there's no reason to be concerned. Agents and brokers are educated, they're licensed, they're knowledgeable, they know how to handle this. They just need to call an agent or broker. So it's important, you know how it works. It's no different from selling anything else. It's just that those folks are going to come off of Medicaid onto, most likely, as Marcy said, the marketplace, because they're going to be in that certain niche, unless for some reason they got a huge, wonderful job and they're out of the income range, but most of them are going to be within that marketplace. And you'll just need to flip them over. Of course, we know there's no more health questions, so it doesn't matter. I had a lady call me the other day who had a liver transplant. She was told by Medicaid this was going to happen, very concerned, just had, transplant, what's going to happen? Medication. Well, it's okay because the marketplace is just going to take care of you. So it's just going to flip. But again, as Marcy said, as agents, you need to find out, is their doctor covered? Is their medicine covered? Are they in the right plan that works for them? Is a price that they can afford? So just do your job. Do what you always do. You do it wonderful. That's why you guys are the best of the best. But you just need to know it's happening. Pay attention.
Okay. We're winding down here. I have a couple more questions. And one is, like to know what's going on with the carriers. Ronnell, what do you see on the horizon coming from the carriers that will impact the health insurance agent?
I'm seeing some of the carriers go into new markets. So that's a good thing. Them going to new markets and hopefully not going into a market like they've done in the past, saying, we're not going to pay the commissions first year. We're just going to put our toe in the water. Well, hopefully with CMS putting the hand on, they know they can't go into a market and not pay us, that they must pay us. So I see that happening. Hopefully they're realizing that we are part of the solution and we're not the problem, that we want to be partners with them and we want to work with them. But I think you're going to see more competition, hopefully. But with some of the things that are coming down in the transparency piece, and then, you know, the plans that need to be that look a specific way, how that's going to affect their rates, that's going to affect how they, implement plans. Things are going to be a little bit different, I think, in 2023, but you just need to pay attention who's in your state, who's in your, what plans they're offering. And if you have any questions, you just need to let us all know.
Okay. And Marcy, do you have anything to add about what you see going on with the carriers?
I agree with Ronnell. We're seeing more carriers entering the markets across the board. And the only thing that makes me nervous, because we love competition, right? We want to see that. But with some of the uncertainties in the market that we talked about earlier, it gives me pause, and it sends me back to the first couple of years of the ACA, where we saw carriers coming to the table and then realizing that the statistics and the projections weren't correct. And then we saw that large exodus of carriers. And now we're at the point where they're coming back in. And I just am so nervous about the family glitch going into the proposed rule going into place at the same time as folks are doing open enrollment, with the unwinding and being uncertain about the subsidy levels, that I worry that we could see that exodus again in the coming years. I really hope that I'm wrong and that everything happens with a very smooth transition, because we want to see this momentum continue with the carriers coming back to the market and being ready to play and participate.
All right, sounds good. Before we close the webinar, I know that each of your organizations has a big event coming up this summer, and I would like to give you the opportunity to say a few words about it. Marcy, since your association's event is coming up first, it's coming up at the end of this month, can you tell us very briefly what's happening at your annual convention?
Sure, it's next week, so book your flight right now to Austin. Registration is still open for in-person. Go to nehu.org. It's right on the front page, but like I just said, we'll be in Austin, June 25th through 28th. We have we'll be doing our NEHU Association business, but if you're not a member, and we hope that you are, you can still come. We have days of professional development. Some of it will go into some of the legislative issues that we discussed here today, and go into more depth. So if you're interested in any of the topics we talked about today, go to nehu.org and come join us in Austin, June 25th to 28th.
All right. And Ronnell, HAFA has its annual meeting in August. So tell us what people can expect there.
We are so excited. We're going to be in Nashville, Tennessee this year, August 18th and 19th. The 17th is going to be a party on the penthouse. So we like to have fun and we learn a lot. All day Thursday will be speakers, sponsors, and then a half a day on. One of our keynotes is Dean Mose from CMS. So for those that want to ask the hard questions or just to shake his hand for getting our money back, I think that would be important, just to come and tell him thank you. But we have some important legislators from Tennessee, Congressman Harshberger, who is one of our biggest advocates. So we're excited about what's going to happen. Everybody can come. Hotel room is 21C Museum. That's where we're going to be at. And as Marcy said, you can go to our website and click registration and register. We would love to have you, member or not, doesn't matter. Come and have a good time with us. Saturday night is a black tie affair. It will be a big casino night. It's going to be a packed fundraiser. So please come and join us.
All right. Sounds good. Marcy and Ronnell, I'd like to thank you for sharing these insights with us today. I think we had a great conversation, but now I'd like to turn to Ashley and ask her to share any questions we received from our audience. So Ashley.
Thank you. I'll tell you, it was hard to find the questions through all the compliments you guys were getting. Everyone, was very excited to have all of the information that you provided today, but we do have quite a few questions here. We'll see how many we can get through. All right, the first one, what if your client doesn't earn enough income to qualify for marketplace coverage after Medicaid?
So hopefully after Medicaid, that sounds like they might end up in that gap where they make too much to have Medicaid, but too little to make to get a subsidy on the exchange is what I'm hearing. And unfortunately, it sounds like they're also in a state that may not have Medicaid expansion to help with that gap. And these are the tough ones, right? And I have agents and brokers that come to me with these, and they say that they sit down with their clients and they go through every eligible or possible income stream that they could have, trying to make it so that they can show that they do make enough to get on the exchange and get that subsidy. But those are some of the tough ones where sometimes we do have people that fall into those gaps and aren't going to be eligible for any type of assistance.
So with that being said, in regard to Medicaid expansion, if you live in a state where it's not available, how do you recommend they make it available in the state? Like, what can they do to bring that in?
I mean, that's huge, because that means the state government has to make that decision. So that's not something that comes easily. In the beginning, it was more, if you have a Republican state or a Democratic state, easier, but that's not necessarily the truth anymore. But just know that get involved in state government, have those hard conversations with your legislators and see what difference you can make. But know that there's money involved, and anytime there's money involved, because it's not just federal dollars, anytime there's money involved, it can be complex.
And being part of your state association is a great way to try to advocate for those changes. I know right now, North Carolina is working their way through a Medicaid expansion bill that's being tied up because of some politics. And then there are some other states that have had a lot of excitement over Medicaid expansion, like Missouri, which passed it, but didn't pass a funding mechanism. And then it went to their state Supreme Court about whether they could implement it without a funding mechanism. So even though we're years out from states originally making some decisions on this, there's still some I don't want to say excitement, because that probably doesn't sound exciting to other people, but there is still a lot of movement and different paths that states are taking to try to get there and try to fill that gap.
Excellent. Are the commission disclosure rules applicable to group insurance as well as individual?
Yes, absolutely.
Yes. Group and individual. On
the group side, it's medical, dental, and vision. And on the individual, it's medical.
Awesome. Someone asked us a specific question to Marcy. Can you talk about the big vote and name change?
Oh, sure. That's not what I thought they were going to ask. So NEHU, during our meeting in Austin, so once again, plug to register and come join us out there next week. There is going to be a vote in what we call our House of Delegates to change the name of our organization. We have heard a lot of feedback over the years that specifically the word Underwriters just really doesn't reflect the vast difference in membership that we have from people who are agents and brokers and consultants, or consider themselves benefit specialists, all of these different things. So there is a proposal to change the name. And now that I'm being put on the spot, I'm probably going to flub it, but I believe it's National Association of Benefits and Insurance Professionals. That's right. And it would be NABIP or BIP. So National Association of Benefits and Insurance Professionals is the proposed change. And once again, that will be voted on next week a little bit. That'll be on Tuesday, the 28th of June, that we'll be voting on it. And so we'll be sure to share the news on that. And then if it does pass the House of Delegates, then we would have a rollout of a rebranding for NEHU to become NABIP or NABIP, or however we're going to position that. And we are working with a public relations firm on that right now to put into place a rebranding process so that everyone knows, from our very valued partners in the media and Insurance Newsnet to the folks on the Hill and in state legislatures, and just everyone across the board will make sure that they know.
Excellent. Would employer-sponsored long-term care insurance require the disclosure form?
That's not specifically outlined in the law.
Good to know. Do you have an agent disclosure statement for life insurance policies too?
That's not included in the law.
And if they, it sounds, are they asking if they have to, or if we have a statement for them?
I think they're asking if you have one.
No, but I think that if you feel as though you need to disclose, which to Ronnell's point, it's not included in the law for life insurance, but if someone wants to disclose, I think that you can repurpose the language in our resource library to reflect life insurance.
Right, you would just add it to the form.
All right, good to know. All right, we have one last question here. Do you see agents that are strong in the Medicare market, can or should they be able to add ACA? The language is similar, but the process is a little more involved.
To sell both? Is that what they're saying? Asking?
Yeah, I think they're asking if they can add in ACA. I'm not entirely sure.
I've always said that you need to have your fingers in all boxes. It's okay to be totally, Medicare is my jam and that's what I know. But if you don't have another partner that does ACA group in your, in your family, then you're missing out. So I think it's a good opportunity to make sure that you play in all sandboxes, or you have an expert that works with you in that sandbox. Because even going ACA to Medicare, I can't remember the number of how many people are turning 65 every day. If you're not working in Medicare and ACA, your clients are losing. They do not have that continuity from ACA to Medicare coverage.
And just make sure, if you are looking at going into a different market, that you are certified in the correct places. So I know Medicare has their certification process and the classes that you have to do through AHIP or with NEHU that we've been appointed through several Medicare carriers to provide the Medicare certification. But then for ACA plans and selling on the individual exchange, that is a different certification that they have to do on the federal exchange through CMS, and then the state exchanges either partner with CMS for that certification or have some of them have their own certification programs for their state-based exchanges. So just want to make sure I'm pointing that out as well, in case that was part of their thought process of adding a different market.
Excellent. And that's actually all the questions that we have for today.
Right. Thank you, Ashley. Thank you again to Marcy and Ronnell for educating us on so many of these crucial issues. And best of luck at your upcoming conventions. And thank you for what you do for the industry. Ashley, will you please close the webinar?
Yeah, thank you everyone for attending today. And thank you so much to Susan, Ronnell, and Marcy. You will be receiving an email with a recording of this webinar early next week. And please keep an eye out for the next webinar in this series. Thanks, everyone.
Thank you.
Thank you.